Hello and welcome back. Today I want to talk about another indicator called Price Oscillator. Uh, what is Price Oscillator? A Price Oscillator uses two moving averages, which one of them is short period and the other one is the longer period. Uh, and the difference will be calculated between the two moving averages. So the Price Oscillator technical indicator uh, can be used to determine even like using two moving averages to determine the trend, but also it is good to determine the overbought and oversold situation. So I'm going to explain that a bit more for you guys. First, let's look at the price oscillator. So type it here, price oscillator. You can see it here. Price oscillator. Sorry, I added twice. Just close one of them. Okay. You can change the settings, the number of the short period and longer period, but I'm going to leave them at 10 and 21. The source, normally we apply shift load, but then again you can change that. And you can use another moving average types. On trading view, you can use exponential as well. On some other trading platforms, you may be able to use other moving average types. Anyway, I'm not going to use the settings for the price oscillator, so I'm leaving that as it is. What does that mean that the price oscillator uses two moving averages? It may seem a bit complicated, but let me just add two moving averages. So I'm going to add a moving average. Okay, two moving averages. First one, I'm going to change the settings. Here you can see that we set the price oscillator periods to 10 and 21. So I'm putting the first one at 10. Color blue, it's okay, yeah. Right there. So, and the style, and that's fine. So I'm just leaving, it's just changing the length of the indicator. Okay. Second one, for the price oscillator, we set at 21. So I'm going to set this again at 21. 21, and I'm just changing the color because it's similar to maybe something like this. Better. Okay. Press OK. You can see here. We have a zero line. So anytime moving averages cross each other, you can see that we're crossing zero here. That's let's check the next one. Here you can see again moving average, the shorter moving average goes below the long-term moving average, and the price oscillator indicator just goes below. So you actually don't need to use those two moving averages there, and you can use only one price oscillator indicator to determine the crossing points. But I'm gonna use moving averages anyway. I'm changing the 10 just to something bigger, like maybe say 100. Okay, that's to help us, to determine the trend. And I'm gonna change. Oh, sorry, I'm better maybe to make one 200 because we're using daily. So I'm making this 200, and then I'm changing the other one to 50. Why I'm doing this, just to determine the trend. You can see from here the trend is up because the 50 MA is above 200. That's very normal procedure. Many traders use to determine the trend. Okay, why I did that? Because in any trade that you want to open, for any trade you want to open, you never want to go against trend. What does that mean? It means that here, when we are in uptrend, you just buy, you never sell in downtrend. And when it's in downtrend, you just sell. Okay, you only sell. I told you that the price oscillator technical indicator can also suggest the areas of overbought and oversold. Okay, just have a look at your price oscillator indicator. Don't make it too complicated. You can add maybe two lines, for example. You go there, a horizontal line will do. I'm adding the horizontal line somewhere that I can see mostly across. Okay. So sorry, I should have chosen the horizontal line. Anyway, it doesn't matter. And one here. Okay, perfect. You can see we have areas of overbought and oversold situations. Okay. Why I did that? That helps us to determine the entry point or based on oversold or overbought situations. Okay. When we are in uptrend, like here, and we are in oversold area, it's very good entry point. So you buy here, as you can see, just looking at another arrow. Here we are in oversold and we are in uptrend. Don't forget. In uptrend, you are going to buy only. Okay, we are in oversold in an uptrend here. So we put a buy order here and price goes up. Perfect. Again, you can just leave that open until you get to an overbought and come back here maybe, or maybe when the price crosses zero here. That depends on your strategy. In this situation, some people open a few trades, then they close one here, then one when it crosses zero, and leave the other one until the uptrend continues. That's just depends on what's your strategy and how you want to trade. And in some trading platforms, you can close the position partially, so they can put a big buy here, then close part of it here. Then when you go back from the overbought situation here, then when it goes to the zero line again, so you close another part and leave the rest for it to just ride the trend. Again, we're looking here, this line we drew that was based on the previous price actions. So that group gives you a very good idea of what's the overbought and oversold for this instrument. We are looking at Swiss franc and or West Japanese yen. This number looks like very good oversold situation. Again, sorry, we are still in uptrend and we see an oversold here. So as soon as we see the oversold in an uptrend, again we put a buy order. I'm using another arrow to show you. So we put another buy here, and you can see gold price goes up. And again, that's up to you. How you want to trade it. When you go to the gold situation, you can close here, or when it goes back to zero, close here. That's completely up to you how you're going to treat it. But as I said, I would like the opening a big position, then close partially when we go toward both, and then when Price Oscillator goes back to zero. Same scenario will be usable when we are in downtrend. So when we are in downtrend like here, you can see we are in downtrend. You just open short positions. But when you open in the short position, then it's when Price Oscillator is in overbought like here. So again, we're listening to the indicator, we open it sell and price goes down. Here you're not going, oh yeah, actually this was the, sorry, I should have done lines. So again, it goes to oversold and you can close some there, then it goes to zero, close some there. Yeah, that was all about this indicator, Price Oscillator. I hope you can use this indicator in your trading and you can make some good money. Just bear in mind, follow your strategy, believe in what you're doing, and you're gonna start making money. Thanks for watching. Don't forget to subscribe and have a